But it's not digital gold either because it's got nothing in common with gold. Yet despite that, you hear all these asinine statements being made. Of course, again, nobody is paying attention to gold. Nobody's paying attention to silver. Even fewer people are paying attention to the mining stocks because they're just paying attention to Bitcoin. They had that 100,000 party. Bitcoin got above 100,000. It didn't stay there for long. I mean, it's back below it. In fact, I think it's around 96,000 now, but I mean, it's still pretty close. But, the main reason it's still so high is because of Michael Saylor, who just announced this morning another 2.1 billion spent buying Bitcoin. That's 13.6 billion he's spent since November 1st. And now he's got this other company, Mara, that just announced, I think today or yesterday, it just spent another $1.1 billion buying Bitcoin. You've got these companies that are levering up their balance sheet, issuing debt to buy Bitcoin. And again, the institutions that are lending them the money don't want to buy Bitcoin.
Welcome to the Economy Express channel, your trusted source for the latest and most compelling insights into the world of finance, investment, and global markets. Tonight, we turn our focus to a subject that has been dividing the financial world, cryptocurrency, and in particular, Bitcoin. Esteemed economist Peter Schiff is making waves with his fiery critique, branding Bitcoin as the greatest scam in recorded history. Stick with us as we break down his arguments and explore what this could mean for your financial strategies. Peter Schiff, a vocal critic of Bitcoin, has taken the stage once again to deliver what he sees as an urgent warning to investors. According to Schiff, Bitcoin is neither digital gold nor a legitimate currency. Instead, he argues, it is a speculative asset, propped up by hype and manipulation. Despite its meteoric rise, he claims Bitcoin has no real utility or intrinsic value. Schiff points out that Bitcoin has failed to serve its original purpose as a medium of exchange, as outlined in its founding white paper by Satoshi Nakamoto. Instead, it has been rebranded as digital gold, a comparison Schiff vehemently disputes. He points to the reckless behavior of corporations like MicroStrategy and Mara as key drivers of Bitcoin's inflated price. They
don't want to take the risk. They think they've got a freebie. They think they've got a free ride on Bitcoin by buying these convertible notes. They're hoping to cash in a big profit when either Mara or MicroStrategy shares go up, and they want to sell with a big gain. But they expect that if the stocks go down because Bitcoin goes down, well, they just get their money back, right? Because they're creditors. They're guaranteed their money back. Well, they're not guaranteed anything if MicroStrategy can't pay or Mara can't pay, which they won't be able to do if the price of Bitcoin goes way down, which ultimately it is going to do, especially when all the buyers really, it's our MicroStrategy and Mara and a lot of these ETFs, which are all speculators. This is all spec money. Nobody is buying these companies to use Bitcoin as money, to use it as a medium of exchange. I mean, that was the entire purpose for which it was created. Go read the Satoshi white paper. They had to reinvent it as digital gold because it failed at its primary objective because it can't do it. But it's not digital gold either because it's got nothing in common with gold. Yet despite that, you hear all these asinine statements being made. Michael Saylor now is advocating. I'm not making this up. I just heard the interview. He's saying that he wants the U.S. government to sell all of its gold, 100% of it, and buy 25% of the Bitcoin in the world, like all just bought up by the U.S. government. And he claims that if the U.S. government does this, it'll make gold worthless. We'll demonetize gold and bankrupt all of our enemies who own gold. Well, first of all, if we're going to make gold worthless by selling it, how are we going to use it to buy 25% of the world's Bitcoin, right? So it doesn't even make any sense. But what good would it be to own 25% of the world's Bitcoin? I mean, it means nothing. He thinks, the U.S. is going to own the world. We're going to rule the world with 25% of nothing. We're going to be the laughing stock of the world if we did that. And meanwhile, our trading partners would scoop up that gold. It wouldn't be worthless. It'd be even more valuable when the U.S. government no longer owned it. I mean, it's the most asinine idea to suggest that. But again, Michael Saylor doesn't give a damn about the country. He just wants to prop up the price of Bitcoin. He's just talking up Bitcoin. He doesn't care how much damage he has to do to the U.S. economy. That's why a recent post I put on X, I said that Bitcoin is now a national security threat. It's public enemy number one. I mean, it's one thing if people want to be dumb enough and put their own money in Bitcoin. I mean, I don't care. People can lose money if they want. I mean, it's not good for society because we could use those resources productively. But, if in a free country, people can waste their money. I mean, there's nothing I can do about it. People have a right to do dumb things. That's what freedom is all about. Now, we'd be better off if people did smart things with their money, but sometimes they do dumb things and they'll learn a lesson. But it's a completely different ballgame when you're talking about government using the public money, where politicians have been bribed to go out and buy Bitcoin. Just to do what? I mean, I was watching Larry Summers. At least, he was asked about this idea about a Bitcoin strategic reserve. He said it's the craziest thing he's ever heard. He says, why should we want to buy Bitcoin and just hold it forever just to prop up the price of Bitcoin and enrich a bunch of people who made donations to the Trump campaign? I mean, that is the only purpose of it. Remember, the Loomis bill not only requires the U.S. government to spend to buy a million Bitcoin, but it requires the government to hodl it for 20 years and never sell it, which, of course, defeats the whole purpose of having a reserve. How can you have a reserve that you could never sell, right? The purpose of a reserve for currency is you can sell it to defend your currency if you have to. But if you've already committed to never selling it for 20 years, then it's worthless as a reserve. And, of course, if you could sell it, the price would crash, which also makes it worthless as a reserve. The only good thing is that this bill really has no chance of becoming law. If you look, Senator Loomis, who introduced it, there's no co-sponsored in this thing. None of the Democrats are going to vote for it. Well, there's just one guy in the House from Silicon Valley. He said that he was in favor of it. But I looked through the internet. I can't find anybody who's come out in favor of this bill. There's one Pennsylvania. Somebody in Pennsylvania has introduced a bill on a state level to have the state of Pennsylvania have a Bitcoin reserve. I mean, they need that like a hole in the head. But again, I don't think the legislatures are actually going to pass any of this nonsense. And, that's really what they're trying to do. It's just the specter of it, the possibility has got people excited. And so people are buying, but the smart money is selling. A lot of people have been selling Bitcoin. Why do you think it didn't stay above 100,000? Somebody sold it. I put this out on X today, or not today. I think it was yesterday. And it shows you none of the Bitcoin crowd even understood what I was saying. But gold, the first gold ETF started 20 years ago. And there's a bunch of them now. But the first one was 20 years ago. And so over the past 20 years, if you look at all the gold that all these ETFs own, it's about 1.6% of the above ground supply of gold. That's it. 1.6% in 20 years. That's all they've been able to buy. Now, if you look at how much they own relative to the trading every day of gold, it's about 1 day's volume. So basically, if all of the gold ETFs in the world liquidated all their gold on the same day, the market would absorb it. I mean, gold might be down a bit, maybe it'd be down $100. I don't know, but the market would absorb the selling, all of it, no problem. Look at what's happened just this year with these Bitcoin ETFs. I think the Bitcoin ETFs, along with MicroStrategy and Mara, right? They own at least 8% of the Bitcoin already. Not just, like above ground, like gold, because there's gold in the ground that is not owned by these ETFs, but they own 8% of all the Bitcoin that will ever exist, right? All 21 million, right? They've already amassed 8% of it, and it hasn't even been a full year. I mean, at the rate they're going to gobble up all this Bitcoin. I mean, how scarce can it be when it was this easy for these ETFs and these companies to buy up so much Bitcoin? Somebody was willing to unload their Bitcoin on these entities. And again, these entities that own it, they're not married to it. This is a trade. They're expecting to sell. They're wanting to cash out. If you look at the total amount of Bitcoin held by these institutions, ETFs, it's over 10 times the daily trading volume. So if there's ever a big liquidation out of the Bitcoin ETFs, look out below. There is no depth to this market. Right now, they're all hoping that it's the government that's going to bail everybody out, right? A government bailout of Bitcoin, because the government is going to use the power of the state to coercively force people to buy Bitcoin that they don't want to buy, right? But it's not going to happen, right? Everybody is setting themselves up for something that's not going to happen. Meanwhile, the Trump family, yeah, they're out there pushing it. Eric Trump, I saw he made a speech at a Bitcoin conference in Abu Dhabi today or yesterday, whatever it was. I was actually invited to that conference. They offered to pay my airfare first class, put me up in a hotel. They even offered a small honorarium to get me to speak. And, I would have liked to have spoken there, but I just didn't want to take the time to make that long trip. I mean, they also tempted me with tickets to the Grand Prix race. They had like a booth there. It was, it sounds like a good time, but it's a long trip. I just got back from my vacation. We got winter break coming. I just didn't want to go all the way out to the Emirates. And, with the time zone change and everything. I mean, maybe if they had said, hey, we got Michael Saylor willing to debate you, I might have been willing to tough it out. But just to show up at a conference and, and be the party pooper on Bitcoin, it wasn't worth it to me. Maybe if it was in Miami. But the point is, I mean, Eric is saying ridiculous things about Bitcoin, absolutely ridiculous things, not quite as crazy as Saylor. But, that's the family business now that they're in. In fact, I meant to mention this on my last podcast, but when Bitcoin hit 100,000, Donald Trump posted on Truth Social, which was reposted by one of his kids on X. He said, congratulations on $100,000 Bitcoin. You're welcome, right? He said, you're welcome, meaning he understands that they can thank him. But before anyone had a chance to thank Trump for helping push the price of Bitcoin to 100,000, he went out and did a preemptive, you're welcome. So he knows he's the reason that Bitcoin hit 100,000. He's the only reason it hit 100,000. Had he not been elected, it would probably be sub 50,000 right now. And by the way, Michael Saylor's average price now for MicroStrategy is finally over $60,000 per Bitcoin.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Companies, led by figures such as Michael Saylor, have poured billions into Bitcoin acquisitions, leveraging their balance sheets and issuing debt to do so. Schiff highlights the risks of such aggressive moves, warning that these companies are not prepared for the catastrophic losses that could come if Bitcoin's value plummets. He adds that institutions lending money to these firms are taking enormous risks, believing they are insulated from losses. But Schiff cautions that in a major downturn, these safeguards may fail. Now, here's where Schiff takes a bold and controversial turn. He criticizes recent proposals, including one by Michael Saylor, advocating for the United States government to sell all its gold reserves and invest in Bitcoin. Schiff calls this idea not only asinine, but a direct threat to national security. He argues that selling gold, a globally trusted reserve asset, to buy Bitcoin would not only destabilize the U.S. economy, but also empower foreign nations to acquire American gold, leaving the U.S. vulnerable. Schiff isn't alone in his skepticism. He notes that even former U.S. Treasury Secretary Larry Summers dismissed the idea of a government Bitcoin reserve as the craziest thing he's ever heard. Schiff highlights the impracticality of such a reserve, explaining that a functional reserve must be liquid and available for use during economic crises. In contrast, Bitcoin's price volatility and speculative nature render it unsuitable for this role. Moreover, he points out that legislation such as the Loomis Bill, which proposes a government Bitcoin reserve, lacks significant political support and is unlikely to become law. Turning to the broader Bitcoin market, Schiff raises concerns about the concentration of Bitcoin ownership. He reveals that within just 1 year, Bitcoin ETFs, along with companies like MicroStrategy and Mara, have amassed 8% of all Bitcoin that will ever exist. By comparison, gold ETFs own only 1.6% of the above-ground supply of gold after 2 decades of existence. Schiff warns that such concentrated ownership in Bitcoin poses a systemic risk. If these entities were to liquidate their holdings, the resulting sell-off could crash the market. He further explains that Bitcoin's daily trading volume is insufficient to absorb such a liquidation, creating a precarious situation for investors. Schiff also addresses the political influence surrounding Bitcoin's rise. He notes that prominent figures, including members of the Trump family, have publicly endorsed Bitcoin, further fueling its speculative bubble. He shares a particularly striking anecdote about Donald Trump taking credit for Bitcoin's rise to $100,000, claiming it as a direct result of his policies. Schiff, however, sees this as an example of political opportunism rather than genuine economic insight. In a striking comparison, Schiff contrasts Bitcoin with gold, emphasizing gold's enduring stability and universal trust as a store of value. He notes that gold's market has the depth and liquidity to withstand significant sell-offs, unlike Bitcoin, which he describes as a shallow market dominated by speculative traders. Schiff cautions investors to recognize the difference between a tangible, time-tested asset like gold and a highly speculative digital currency. Before we wrap up, let's reflect on Schiff's overarching message. Bitcoin may glitter like gold, but beneath its shiny exterior lies what he describes as an unsustainable bubble. He urges investors to think critically and consider the risks of chasing speculative gains in Bitcoin. Schiff advocates for a return to fundamental assets like gold and silver, which he sees as reliable safeguards against economic instability. Here at the Economy Express channel, we bring you perspectives that challenge the status quo and spark critical thinking. Peter Schiff's passionate critique is a reminder to all investors: stay informed, ask tough questions, and make decisions grounded in long-term value, not short-term hype. That's all for today's edition of Economy Express. We'll see you next time with more insights, analyses, and expert opinions. Until then, stay sharp, stay invested, and remember, knowledge is your greatest asset. Good night.